Hi everybody, my name's Lizzie Rowe. I'm a partner in the asset finance team covering Maritime and also head of the Singapore office at Watson, Farley and Williams. We have an incredible panel of experts up here with me. We have Christoph Toepfer, the founder and CEO of Borealis Maritime. We have Khalid M. Hashim, who's the managing director of Precious Shipping. Philip Clausius, the managing partner of Transport Capital, and Suresh Kumar, who's CEO of shipping for Bothra Group. So this is very much a discussion that kind of follows on from a lot of the things we've heard earlier this morning. I think everyone here probably did expect that 2025 would be somewhat unpredictable, particularly given the commencement of Trump's second term. I don't know how many in the room expected that we would have quite the degree of the economic turbulence that we have experienced. If we cast our mind back to the beginning of the year, we saw the fears of the escalating trade wars, a sharp stock market plunge, growing tensions between the US and China, and a weakening US dollar. Jonathan covered a lot of these topics in his presentation earlier, and I think suffice to say, as we get to the end of the third quarter of this year, the situation remains somewhat complicated. So what lies ahead? Well, we recently saw the Fed cut interest rates by 25 basis points, and they've indicated that potentially there'll be a further 2 cuts. And so what impact are we thinking this might have? Are we still going to be on this roller coaster ride, or can we look forward to some relative calm? And more importantly, what does this mean for the shipping industry in the months that lie ahead? So a lot of ground for the panel to cover, but I think as a starting point, I'd like to hear from each of the panel members, if you have to pick out one individual factor which you think has had the biggest impact either on the industry as a whole or your individual business, what would that be and why? Suresh, maybe you can start us off.
Good morning, Lizzie. Thank you. Thank you, Marine Money, for inviting me to this wonderful program. To answer straight, broadly, I think global leadership. We talk about geopolitics. We talk about a lot of uncertainties, but I would say very broadly, global leadership, lack of global citizenship, resulting in regionalism, and then fallout of all of this is geopolitics, and then again, fallout of that is trade and policy disruption, investment decisions. So to me, these are the headline items, I would say, in terms of the question you put on uncertainties.
And Philip, similar answer from you?
Yeah, I think I would echo this. Clearly, the change in leadership in the US has been the catalyst for most of the things we are discussing today. But if you look at it more on a macro level, I think what's going on here, we are at the beginning of a very, very long period of change in global leadership from the US to China, and I'm not suggesting it's a short-term phenomenon. I think it's a 100-year process. And in the history of the world, we have never seen a transition from one global power to another global power without friction. And I think, I firmly think that these distortions, frictions, turbulence is here to stay, irrespective of what happens in the next election in the US. I think this is a new normal. The bright side is this doesn't have to be all bad for shipping.
Good to see some positivity up here, thank you. Khalid, your thoughts on the biggest factor?
I think it's China. China slowed down in the first quarter of this year, and you could see that in the results of all the players, especially in the dry bulk sector. You could see how clearly China impacts our market. And once China started to get its act in order, you can see how the third quarter has really blossomed out very nicely. So I think that it's still very much a China play as far as dry bulk is concerned, and it's the single most important factor that affects us.
And Christoph, anything different to add to the mix?
Yeah, I think a couple of observations around geopolitical events that has had a big influence. I think, in my view, the Liberation Day was probably the biggest one because it really enhances protectionism and nationalism again. It obviously is having influences on trades, some of them short-term, some of them very long-term shifts. But also, I think the consequences of the very nationalist and protectiveness of the US is that it actually enhances the coalition against the US to some extent. The show of force that China showed with the military parades, with the invitation of Kim Il-jung, Putin, Modi, the absolute show of closeness between these parties against the US to some extent is going to continue to have friction in the world politics. I think it will be much more difficult in the future to build coalitions around things that we may sometimes agree on. And for me, that is the biggest shift that long-term will change also the way trade is being organized. I think it's too early to write off America. I think if you look at the capital availability in the US, if you look into the innovation that is still happening out of the US, I think the US will have a long-term play still here. In friction with China and with other global powers, but obviously China the main one. But for me at the moment, protectionism, nationalism is the key that is shaping the agenda for shipping as well.
Okay, interesting to hear. And Khalid, you sort of picked China as kind of the key driver from your perspective. And I'm interested because pressure shipping has historically focused sort of on some of the smaller size vessels. And I'm wondering, how has that strategy kind of helped you navigate some of the turbulence you've experienced in the past? And how is that sort of shaping up the strategy as you look forwards?
Okay, so our strategy actually was not so much focused on China, but it was more on the decarbonization side of the business. And what we saw was that there is no consensus on what is the fuel of the future. Secondly, at the April meeting with America withdrawing from the IMO meeting, which came to an agreement, and that agreement is now supposed to be translated into action in terms of targets and goals in October. And America has just simply said that they threaten any country that does that, they're going to. So for us, I thought decarbonization was where we should be focusing on, and that's what we've done. So we're basically letting go of all our older ships and replacing them with younger and much more efficient engined ships. And the fact that we are going up in size on an average basis also means we're carrying more cargo, and therefore our grams of CO2 per ton mile of cargo being carried is reducing. So that was our focus and our strategy. So we got that right, I think, in that sense. And then the markets. The first quarter, as I said, was weak because of China coming down. But if you look at one of the exports of China, which has really helped us a lot in our sector, is the steel exports. And if you look at that, last year it was a staggering 111 million metric tons. Now Clarksons have revised that number to 120 million tons for last year. And this year is already progressing at the rate of about between 10 and 12 million tons per month. So it's really significant, and that is really carried by our sector.
And Christoph, coming back to you, have you seen this economic uncertainty kind of having an impact on the access to capital for ship owners? Do you think lenders are becoming more cautious because of geopolitical factors, or is it very much just business as usual?
It's surprisingly business as usual. Actually, to some extent, obviously we have been through an extraordinary time around your profits for shipping across all sectors, but really at the moment I think access to capital hasn't been easy almost. Maybe not on on the US capital front for private equity or so, that's different. But if you look in general, if you look at the availability of debt, the terms at which you can get debt, it's extraordinary. We are obviously in a very high-priced environment right now. Assets are generally quite expensive historically, and we're seeing a significant amount of margin erosion. I heard yesterday that an owner had been offered a debt facility at 1% margin. You see the availability of debt through the Norwegian bond market and other things. So there is a significant amount of capital, Japanese capital as well, coming into the market. So quite surprisingly, despite all these uncertainties to some extent, the lenders are lending. But obviously at the same time, the balance sheets of the shipping companies are very, very solid these days. There is, many companies are unlevered these days, don't even want any debt. And that has driven banks to try to be super competitive in order to convince people sometimes to take on some debt. So at the moment, we don't see the availability of capital as any issue, quite the opposite. Too much capital almost is around. And also from the ship owners, you see people bidding up assets where they feel like, oh, well, I wanted to buy some younger ships, I want to renew my fleet, and they're paying quite top dollar to do that, well, because they're sitting on a lot of cash. So we see asset prices sometimes not really reflecting what we think is justified basis forward earnings.
Okay, but it sounds like a good time to be a borrower then, if those are some of the margins which are floating around in the market. Suresh, turning to you, so Bothra Group is looking at the moment to significantly expand its fleet size, and seen there's a number of new build orders that have been publicized. How are you balancing that kind of aiming for growth, but also kind of the risk management against these, uncertain times? Sort of how do the two fit together?
The group predominantly has two verticals of business. One is ports and terminals, and other is shipping. Ports and terminals business, we have been in this business for a good 50 years now. Shipping last 20 years. And being in ports and terminal business gives us a vantage view of the country's progress, and I think industrialization and progress, ports are gateways to any country's progress, and from that perspective we think the kind of asset investments that we've been doing pretty much is to do with the strategy of asset replenishment. We've been in this bulk business for quite some years. Tankers and chemical tankers and MR tankers business, we've been in this business for some time. So some of the investments have been asset replenishments, and the modern tonnages that we have, or the sphere we have entered, is gas and ammonia. We significantly see upside in imports in India in terms of LPG, in terms of ammonia. Government policies towards indigenous manufacturing, ammonia, green ammonia exports. So some kind of broad overview on how we look at opportunities that lies in our land, India, and our strategies are slightly aligned to those progress that we will see the country in general will have. In terms of risk management, yes, we've been in bulk and tanker business, so it's a counterbalance sort of thing, but largely on the ammonia and the gas is based on our long-term partnerships with people who we associate with, and it's more of a service strategy rather than an investment strategy.
And interesting to hear that sort of alternative fuel piece is playing a big factor in some of the decisions that you're making. So Philip, I think Christoph had touched on the point about these fluctuating asset values, and we also heard about sort of some of the currency movements in the presentation earlier. So how do you see your clients sort of grappling with sort of the risk management, portfolio diversification when they're looking at some of these fluctuating prices with the assets and the currency risks?
Well, look, I'm not suggesting that the US dollar will no longer be the currency of the shipping industry. I think it will be the currency of the shipping industry for a long time to come. Yet, you cannot help but note a general nervousness around the dollar. I think there has been erosion in trust in US policies, and obviously in particular central bank policy or the influence over central bank policy. So we have seen certain customers test out other currencies. That's how I would best describe it. I think that goes hand in hand with reinforced efforts by the BRICS countries to develop trade in currencies other than the US dollar. I think this is a clear trend, and if that takes hold in a more meaningful way than it does today, then what follows are shipping contracts denominated in currencies other than dollar. So to be very concrete, we have been lately involved in a number of RMB financings. These were special situations, but I would expect that we will see more of this. We have also been involved in increasingly euro financings, typically with ships that trade predominantly in Europe, but not necessarily earn euros. So there is an attempt by certain shipping players to diversify their currency exposure through some of these efforts, and I think they will grow rather than diminish over time.
Okay. But not the end of the US dollar, but just
no, it's impossible. I mean, it's just not. You know, this will take a long time.
And then, Philip, just another question for you. Kind of, you talked about trends and focusing on the currency aspect. But do you think there's a likelihood that we might start to see more consolidation across the maritime sector, kind of as an answer to some of this uncertainty? Or do you think some of the publicized cases we've seen are the exception rather than the norm?
Look, I think there's zero consolidation pressure right now because liquidity levels in the shipping companies are at all-time highs, and if you allude to the Hafnia Torm situation, which is well published in the media, that's a special situation because in the case of Torm, this is one of the last big private equity investments by Oaktree. There's hardly any private equity left in the industry, given where we are in the asset cycle, and there's no need to consider consolidation, given how well all the companies do. So I don't expect. I would say the liner sector is always a special case, but tramp shipping, bulkers, and tankers, I don't see any pressure to consolidate whatsoever.
Yeah, I think it's correct in terms of the owner side. I think you touched on the liners, but I think the consolidation really happens on the cargo side. On the owner side, consolidation, Hafnia, Torm, even CMB and Golden Ocean, it makes no real difference. But we have seen over the last decades continued consolidation around the demand side. The liner companies today, the top 10 lines control about 85% of tonnage. You've seen it also on the oil major side. You've seen it on some of the mining companies as well. You see it in some regional markets. We're quite active in the offshore supply vessel market, very active in the North Sea. You have now in the Norwegian side, you have Vår Energi and Equinor, sharing vessels together. They make about 80% of vessel demand in the Norwegian shelf. So you have in certain minor sectors, whereas big sectors, you have a significant consolidation on the demand side, which has an influence on your pricing power as an owner.
Okay. Interesting to see it kind of from that other angle, some more sort of the cargo side and how that sort of fits together with Philip's comments on the owner side. And then, Khalid, a question I had for you. So you sort of touched on, when you were talking about your strategy generally, how that was somewhat driven by what was happening kind of with the IMO and the expected decisions in October. And obviously the interview with the MPA talked about sort of what's happening on the bunkering side and alternative fuels. And I am interested because it feels like a lot of the noise that we hear at the moment in the media generally and also the sort of shipping press, it's all very focused on geopolitical factors. Do you think there is still a lot happening on the decarbonisation side? It's just getting drowned out? Or are people sort of more focused on the geopolitical aspects? And is decarbonisation sort of falling further down the list?
I think a little bit of both is happening. If you look at the very, very large ship owners, they've come out very strongly against decarbonization. You know, it's very strange that they should have done that. But at the end of the day, unless and until the IMO actually gets up and stands up and says, look, guys, this is the fuel of the future, or these two are the fuels of the future, you will never get enough traction within the producing part of those fuels to make an impact. And unless that happens, and unless the customers are there to buy that fuel, why would they be producing it? So I think these things have to come together at the right time. So in the meantime, what do you do? We're a very small player in comparison to even the bigger guys who are shouting out that, you know, please don't go for decarbonization. It's not going to happen for at least quite a long time. What is it that we can do? All we can do is to bring down our grams of CO2 per ton mile of cargo carried, and we've done that quite successfully. In fact, we have some green loans, or rather green-linked loans, where we've promised to bring down our carbon footprint by 38% in the next 10 years' time. And why wait 10 years? The way we are restructuring the asset side of the company, we've already more or less met our targets.
So it's still happening, but kind of in the background, people doing what they can, but in light of what's happening.
Correct.
Generally.
I mean, it depends on your size. If you're big enough, you can shout out and people will listen to you. If you're small enough, then you try and do stuff for yourself and try to make yourself a better citizen, and that's it.
When we discussed pre-panel, I said when we disagree, we should also sometimes say that we disagree because it makes it more interesting. And I would defend a little bit the big owners who have come against the IMO. I wouldn't phrase them that they're against decarbonization. They are doing a lot around modern technology, you know, upgrading their vessels. They're just against the way the IMO is trying to implement it. So I wouldn't, you know, phrase it as they're against decarbonization. I think that is an unfair categorization of the owners who are against it.
No, you're right. It is the methodology. As I said, the IMO has to stand up and give us the rules and regulations. Then we can follow it. But if they don't, and they guess, you know, they wait for consensus, then they will end up dissatisfying every single person in the room. And that should not be the objective. The objective should be that we have a goal, this is what we want to do, and this is how we're going to do it, and that's it.
Some clear leadership, which I think, again, comes back to some of the themes from earlier. Just before we move off the decarbonisation point, Suresh, I know you also mentioned that sort of the alternative fuel piece was sort of driving your strategy. So I guess the same question, do you think there is more happening in the background on the decarbonisation piece that we're just not as focused on, or are people getting distracted by the geopolitical uncertainty?
Lizzie, my view is slightly different. What I look at it is shipping is a service industry, and one cannot just talk about shipping in isolation alone. And when you talk about decarbonization, there are producers, there are end users, we are part of the supply chain. So equally clarity should be there of the end users as well as producers to ensure that decarbonization is effective. The strategies have to be cohesive. The plan has to be, the plans of decarbonization has to be inclusive. So I think there is a bit of what you call cutoff and very fragmented and very fragmented expectations. I think this is something where trade bodies, regulators need to bring some kind of regulation like what we see in EU in terms of wake to well to wake emissions. So I think instead of isolation, there has to be consolidation on decarbonization is my view.
Okay. So again, that idea, it's got to come from the regulators and trickle down.
That's right.
Okay. Okay, well that's perfect, 5 minutes, because we did want to leave a few minutes for questions. So maybe before we go on to our final wrap-up question, was there anything the audience wanted to ask? Because I know it's quite an interesting and broad topic. Okay, we've obviously covered everything fantastically. So just then a sort of final question, again, sort of general question for all of the panel. What exactly do you think will be kind of the main challenges looking forward over the next 12 months, and what are you planning to do to try and sort of future-proof against some of those challenges? Maybe, Christoph, I'll start with you.
Well, the biggest challenge for us right now is that we're finding ourselves in a very high-priced environment. As I said earlier, so asset prices are very expensive. Investing into shipping is not easy right now. We are taking a very cautious approach. So anything that we buy, we generally match up with a charter to try to de-risk the initial investment, make sure our capital is well protected. General geopolitical uncertainties have been extremely positive for shipping. I think disruption will continue. There will be events again that will throw up uncertainty. For us also, uncertainty that creates a lower market is actually to some extent for our position good. We like to see, the market eventually to correct to some extent. We have divested a lot. We have ability to invest a lot, but we are trying to be very careful right now. We're waiting for better times, and hopefully also we see the volatility again returning. If anything I've learned in shipping is that, you don't know what's happening tomorrow. Nobody expected any of these big events in the last few years. Something will come again that will throw us off, but that gives opportunity. So I don't see it as a negative. I see anything that throws us off as something that actually gives us opportunity.
So some of those unknown unknowns can create the next big opportunity then. Khalid, your thoughts on what the biggest challenge will be?
No, I think that the supply side has actually been well constrained, and that's the reason why, despite the fact that China slowed down quite significantly in the first quarter, and then they sort of made up a little bit of ground, the third quarter is so strong, which indicates to us that supply and demand are well in balance. And one of the things that we've been able to discover is that, at least in the geared sector, 2.3% of the world fleet is in special surveys and dry docks. So you have 2.3% removed from the entire supply side for the whole year, just on that one factor. The other factor is EPL, engine power limits. And this applies to mainly ships built up to and including 2011. Because till that time, you didn't have proper electronic engines. And those ships consume much more oil. Now, because EPL is law, the IMO has regulated it, we see that about 3.5% of the world fleet is completely slowed down. So that's missing from the equation. And that's, I think, one of the strongest indicators to us that the markets will stay strong. And that's the reason why what Christoph is saying is correct, that the values of ships are not coming down. And if you just take the current market pricing and apply it to the asset, you would never be able to buy. But if you look at what's constraining the supply side and holding it back, then you see that these prices are not going to come down really. So if they're going to stay there, how long are you going to sit out and wait this market? So we're cautiously trying to, at least anyways, we need to renew our fleet. So we're doing it at this time where we think that, okay, we're not trying to buy brand new ships per se, but we're looking at second-hand ships in the 5 to 10 year range. And we're trying to renew those as a new fleet as compared to what we're getting rid of.
So carrying on moving forward, but being aware of the market.
I don't think we have a choice, literally. We have to keep moving.
Philip, same question to you. What are you going to be doing for the next 12 months to protect?
No, maybe just to add to Khalid here, I think he's right. I don't believe that asset prices will correct substantially from here, because there's simply too much liquidity sitting on the sidelines waiting to come in. And every time we have a small asset price correction of 5 or 10%, there's an abundance of people who want to invest, and it's a very short-lived correction in these circumstances. So I do think this high asset cycle is here to stay for a significant period of time, and I share the dilemma that Christoph has been mentioning, but we might be sitting here in 10 years and say we have waited and we've done nothing. So it's not a good solution either.
I recently asked a shipbroker if in my active career I will see another shipping crisis. You know, I'm 55, and he said, Christoph, I don't think so, because there's so much capital around, yes, and it will take a significant amount of time to burn this off. So, yeah.
Well, I'm very happy to hear that. That sounds great. Suresh, just before we finish up, just your thoughts on the biggest challenge for the next 12 months.
So we've always been service providers, shipping and a group as per se. So consolidation, focus on service. Customer is king, cargo is king. We need to stay close to them, stay engaged with them, find sustainable solutions between our partners and ourselves. And having been here, we need to move forward. And how efficiently, how coherently we do that would be our strategy, and it would be a continuous learning process as well for us. I believe industry is quite osmotic, and that should be our strategy moving forward.
Well, thank you very much. I mean, I think it's great to hear sort of the positivity, and particularly the fact we're not going to see another shipping crisis in the next...
But maybe not in the next 10 years.
Well, that's good enough for me. And the fact that, you know, with the uncertainty comes opportunities and not just challenges. So looking forward to seeing what the next 12 months brings. Thank you.
Thank you.